It's flat with a bit of a negative bias. The Nifty is holding on to the 19,770.
But IT stocks have done very well. So despite that, it continues its up move.
It's a 35-point downtick on the Nifty right now. We have seen some recovery from the lows.
But I mean, I was just looking at the Nifty now, and I mean, compared to where 10 minutes back, I mean, it's refusing to stay down. It was really swinging up, down, all over the place, and we finally end with a small 30-odd point gain.
Hello and welcome to Markets Today. I'm Sonal Bhutra, and here are the headlines for this evening. Sensex and Nifty recover in the last hour of trade to end in the green. Nifty closes the day above the 19,800 mark. The mid-cap index records another intraday high, but financial underperform. Most Nifty bank stocks end in the red. The auto and pharma stocks also see gains. Tata Technologies IPO sees strong demand on day one. The issue gets fully subscribed within a few hours. IPO frenzy on Dalal Street has 4 more issues open for subscription. Gandhar Oil and Flair Writing are fully subscribed on day one. Fed Bank Financial Services sees subdued demand. Bajaj Auto MD Rajiv Bajaj shares his plans to launch the world's first CNG bike in 2025. Says he plans to double the production and sale of Triumph motorcycles in the third quarter. Also adds that the two-wheeler industry suffers from over-regulation and taxation. Says the company has not yet come back to its pre-COVID levels.
Now is the time for them to further strengthen their risk management practices, build additional buffers to face the situation if the business cycle turns adverse.
Build buffers and avoid exuberance, says the RBI governor to banks and NBFCs just days after tightening rules on personal loans and unsecured credit. Cautions that expansion of credit must be in sync with the risks. And here's the lineup of what we have in store for you. In Market Opinion, we have Ashwini Agrawal, the founder and partner of Demeter Advisors. In Big Corporate Voices, we have Warren Kevin Harris, MD and CEO of Tata Technologies. We also have Rajiv Bajaj, the Managing Director of Bajaj Auto. Okay, all right, let's move on to the first headline, and that is the day's market action. Sensex and Nifty ended in the green after a last hour rally. Sensex gained just over 90 points. The Nifty got back above 19,800. Bank stocks declined in trade after comments from the RBI governor on unsecured credit. Mid-caps managed to marginally outperform the blue chips, with the index gaining nearly 150 points. Prashant Nair joins in with a wrap of all the action on Dalal Street. Prashant.
Well, it was an indecisive session because the market dipped many times through the course of the day. It came up many times as well, but no real direction. We finally ended slightly higher for the Nifty. The banks struggling a little bit more off the lows, but still down 0.5% or so. That's the index which bears a little more watching. Mid-caps, the index was up about a third, but the small-cap index, after making higher highs for weeks on end, is looking a little weak. We ended the low point there, about 1.25% down for the small-cap index. Now, large caps, I'll just address that first. Gainers coming through in names like BPCL, Cipla and NTPC. Losses coming through in banks, Indusin and Kotak and Adani Ports. Market perhaps paying some attention to news flow there at the margin. In the broader market, advanced decline was 1:1, almost exactly 1:1. Equal number of gainers and losers. CG Power really sort of sparked a rally in the Murugappa Group stock. Stock was up 20%. There was news flow there. Tube Investments and Carborundum Universal were the other names from the group which did very well. Then there was GMDC, E-Clerks, a wide variety of names, but all with sharply higher volumes. New India Assurance, Vardhaman Textiles, Inox Wind, Nitin Spinners, Viatech Vabag, Shanti Gears, Zangle, Sterling and Wilson Solar. Of course, that was the CNBC-TV18 exclusive large order coming through there. Losses coming through, pullbacks, KPIT Tech, even with today's cut, stocks up 30% for this month. So, it's a big outperformer. Honasa, which is Mama Earth, pulled back after starting higher. Delivery, Suzlon, Sonata Software, KIA Industries, RR Kabil, relatively recent listings, Solar Industries, Apar Industries, and Motilal Financial Services. There were many more, but these are some of the top traded pullbacks, volume traded pullbacks that we had. I think back to watching US market, not very much in terms of sort of solid takeaways from today's session to carry over to tomorrow. And in that sense, what Wall Street gives in terms of handoff will be important when we come back tomorrow morning. Back to you.
Oh, it will be. Prashant, thank you so much for joining us with that analysis. Let's get you some market opinion now. Ashwin Agrawal, founder and partner at Demeter Advisors, is positive on the banking space, but worried about defense and railway stocks as valuations are stretched. Listen in.
The earnings support is there, then, the stocks can soldier on. over the last 15 years or so, if you look at the trend, what drives stocks is earnings momentum. Banks look all right to me, and especially the frontliners, because they've moved less. They look okay because I think the credit cycle is still very favorable, unless an unanticipated crisis on the retail credit side comes through, which RBI has, tried to temper down. Barring that, I don't really see a risk for financials, so I'm quite okay with the financials. In defense and railways, I think both valuations are stretched. And I worry about disappointments on order flow, disappointments on payments, disputes, which often arise when government is your primary customer.
All right, that's the market opinion. But moving on to the second headline now, the Tata Tech IPO, the first issue from the Tata Group in over 20 years, is open today and has been fully subscribed in the first few hours of the issue. Non-institutional investors led the demand with a subscription of over 10 times. Rima Tendulkar is here to tell us more about the issue. Rima?
Thanks so much for that. There is so much excitement surrounding this one. First, let's get to the detail. The IPO opens for subscription today, closes on Friday. The price band has been set at 475 to 500 rupees per share at the upper end, which translates into an overall issue size of a little more than 3,000 crore at the upper end. Now, this is an entirely offer for sale issue. The big beneficiary from this offer for sale will be Tata Motors, the promoter entity, which will rake in about 2,300 crore, and the other sellers include Alpha TC Holding and Tata Capital. Now, yesterday, the company raised 791 crore rupees from anchor investors, which included top domestic and foreign investors like your Aditya Birla Mutual Fund, Nippon Mutual Fund, Sundaram, Mirae, and foreign investors like Fidelity, the Government Pension Fund Global, and even Goldman Sachs. Now, let's move on to what the company does. Now, this company provides engineering and R&D services mainly to the manufacturing verticals like automotive, aerospace, and construction heavy machinery. Amongst these three, it's automotive, which contributes to the majority of the revenues. Let me give you an example to explain the kind of work the company does. Now, for Tata Motors, it helped convert their existing ICE vehicle into an electric vehicle. So the project involved complete ownership for design, packaging, and integration of EV components like battery, motor, charging socket, and respective electronics in the base car. Now, moving on to the financials. The annual revenues of this company were about 4,400 crore rupees as of FY23. Growth rate steady, 28 to 29% in the first half of FY24, about 24% in the year gone by. FY21 and 20 growth rates we're not considering because they were affected by COVID. Margins for the company have been fairly stable, ranging between 18 to 19% for the last 2 years, but they have improved from about 16.2% 3 to 4 years ago. And the management is in fact guiding for incremental margin improvement from here on, and their goal is for 20% plus margin. Now, moving on to their client base, marquee client base, but there is a dependence on anchor clients. Their anchor clients are Tata Motors and JLR, the other two big Tata Group companies. In fact, nearly 40% of its revenues comes in from these two clients. But it also derives a very large share of revenue from their top 5 clients, especially in the services segment, which stands at 73 and 71% of revenues in FY23 and first half of FY24 respectively. So any weakness in their top 5, their large client base, can hurt the performance. Cash on the books is solid at $150 million, and the IPO, moving on to the valuations, is being offered at a discount to listed players. Now, Tata Tech is being offered at 32 times FY23 PE, while LTTS and Tata Elxsi are much higher. And top of the list, you've got KPIT, which was actually at 80 times last year's PE multiple. Back to you.
Well, if you look at our margin trajectory, some 4 years ago, we were at about 16.5%. Last year, we came in at 18.6%. And that's largely driven by operational levers such as improved offshoring and improvement and optimization in terms of our people pyramid. We think a lot of the hard work has been done as far as margins are concerned, but we expect incremental improvement, beyond the 18.6%. Our North Star is over 20%. That's what we are, positioning our business plan against, and we expect year on year incremental improvement from where we are today.
All right, that's the word coming in from Tata Tech. But moving on to the third headline today, because Dalal Street is buzzing with a slew of initial public offerings. This week itself, actually, Gandhar Oil and Flair Writing were fully subscribed on the first day itself. It opened today for subscription. Meanwhile, Fed Bank Financial Services saw subdued demand. Hormaz joins us with all the action from the IPO space. Hormaz.
It's been a while since we saw a day when there have been 5 IPOs that are open for subscription. It almost takes you back to 2021 when there were a slew of IPOs that came out towards the end of the year. And even as of Wednesday, there are 5 IPOs that are currently open for subscription. That includes IREDA, it includes Tata Technologies, Gandhar Oil Refinery, Flair Writing Industries and Fed Bank Financial Services. Now for the full year of 2023 so far, we are nearing the 50 IPOs mark. We are at 47 currently with these 5 IPOs, and this number is higher than the 40 IPOs that we saw in 2022. But as of 2021, we saw 65 IPOs that had come out that year. Now as of this year, the companies that have come out with their IPOs have raised close to 40,000 crore rupees. Now, even though the number last year was lesser, the amount raised by companies was more, because 2022 saw companies raise 65,000 crores, and that number is also skewed because the LIC IPO itself was of 21,000 crore rupees. Now, let's take a look at the IPOs that are open for subscription. I'll talk about IREDA first, which is the first PSU IPO that has come out since LIC, that which came out in May last year, and that has received a fairly healthy response. This is the second day of subscription for IREDA, and it has been subscribed 4 times overall so far, with the QIB portion subscribed 2.5 times, the HNI portion subscribed 6 times, and the retail portion also subscribed 4 times. Now Gandhar Oil, that issue has also received full subscription. The overall issue as of now is subscribed 4.5 times. The QIB portion is subscribed 1.5 times. The HNI portion is subscribed 6 times, while the retail portion also is subscribed 6 times. Now Flair Writing Services, that issue has managed to achieve full subscription, but the institutional portion is yet to achieve. That has only received half subscription so far. The HNI portion is subscribed 1.65 times, while the retail portion is subscribed 2 times. And lastly, the Fed Bank Financial Services, which is a unit of Federal Bank, that issue is yet to be fully subscribed. On the first day, it's only subscribed 30% so far. The QIB portion is yet to see subscription. The HNI portion is also subscribed only 15%, while the retail portion is subscribed 55% so far. Back to you.
All right, that's all the update that we have from the IPO corner, but let's move on in stock-specific news now. Railway and defense stocks are in focus after Indian Railways floated a tender for 10,000 wagons and 175 brake vans. Meanwhile, defense stocks slipped after Indian Army issued a request to overhaul T-72 tanks. Vivek Iyer is joining us with all those details. Vivek.
Well, that's right. Look out for both railway stocks, and important triggers developing over there, as well as defense companies. But first, let's have a look at, railway stocks and, what exactly transpired over there. The Indian Railways, a couple of days ago has floated a tender, and this tender is for 10,000 modern wagons as well as brake vans. Now, the delivery timeline of these wagons, will be spread over a period of 7 years, and the bid due date is December 15, 2023. So by December 15th, you will know, who is the winning bidder as far as this particular wagon order is concerned. The potential size of this particular wagon order is close to 4,500 crore. So it's a significant order when, in case, any of the Indian listed wagon makers actually are the lowest bidders over here. Now, along with that, remember, there is also an ongoing tender of 20,000 wagons, which is under consideration, and over here too, it's still yet to be finalized as to who is the lowest bidder. So 2 important triggers as far as the entire railway and wagon maker is concerned. Now, coming to the defense space, what's actually happened again a couple of days ago is that the Indian Army has issued a request for information, or an RFI, to overhaul the T-72 tanks, and this particular RFI has come out on November 21st. Now, what actually happened is that over here too, there will be a long process that happens over the period of the next 2 years. There will be an RFI issuance. After that, this particular RFI issuance has to be gone ahead and approved by the Defence Acquisition Council, and the tender is then issued. So this particular, opportunity size, while quite large, analysts are pegging this particular opportunity size between 14 to 20,000 crore. And remember, whole host of listed companies like BML, BHEL, L&T, all of them are present in this particular space itself. However, the timelines over here could be quite stretched. So 2 important triggers, both for railway as well as defense stocks today.
All right. Thank you so much, Vivek, for all those details. So that's about a particular sector that was in focus. But a particular stock which is on our radar, Sterling and Wilson Renewable, rallied nearly 5%. It was locked in upper circuit on the back of a big order win. The company has bagged a joint venture order, which is worth $2.2 billion. Yash is joining us with all the details on this one. Yash?
Well, it's a large order which has come in the hands of Sterling and Wilson Renewable. The energy minister in Nigeria, through Twitter, he spoke about a collaboration between the Nigerian government and Sterling and Wilson Renewable joint venture. Now, this particular collaboration is with respect to a particular large order or a large contract worth $2.2 billion US, which entails about 961 megawatts of solar PV generation infrastructure and 455 megawatts of battery energy storage. What we've been given to understand is that a definitive agreement as far as this particular order is concerned, that is yet to be signed. But of course, an important announcement with respect to this particular large order has already been made. What the energy minister also spoke about is that there are certain lenders which are willing to support such renewable energy projects, and that goes to the tune of about $10 billion US over the next few years. What we've been given to understand from our sources is this $10 billion US would be spread across 4 stages or 4 phases. The first phase has been announced, which is the $2.2 billion US to Sterling and Wilson Renewable. The next one, of course, will be announced soon, and that one will be with respect to monitoring centers which will be put together with respect to the renewable energy space. But importantly, Sterling and Wilson Renewable also becomes a natural contender when it comes to that next phase of order. Importantly, with respect to this order, what we've been given to understand from our sources is that 1.5 to $2 billion US out of the total $2.2 billion US will be executed by Sterling and Wilson Renewable. This comes with a margin of about double digits, around 11 to 12%. Also, once the definitive agreement is signed, after that in about a year and a half, 2 years, the project is expected to be executed.
Okay, all right. Thank you so much, Yash, for joining us with all those details. That is about Sterling and Wilson, which is in focus. But of course, the standard disclaimer that I'll play for you on the screen, Network 18 and TV18, the companies that operate CNBC-TV18, are controlled by Independent Media Trust, of which Reliance Industries is the sole beneficiary, and Sterling and Wilson is a group company as well. Moving on, we'll take a short break. When we come back, we'll talk about the other headlines that we are tracking for you. Stay tuned for that.
Now is the time for them to further strengthen their risk management practices, build additional buffers to face the situation if the business cycle turns adverse.
Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's talk about the rest of the headlines now. The fourth headline today, Bajaj Auto MD Rajiv Bajaj shared his plans to launch the world's first CNG bike in 2025. He added that he plans to double the production and sale of Trank motorcycles in the third quarter. Speaking to CNBC-TV18's Parikshit Luthra, Bajaj also added that the two-wheeler industry suffers from over-regulation and taxation, said that the company has not yet come back to its pre-COVID levels. Here's an excerpt of that conversation.
we are taken a little bit by surprise, I must admit. We had prepared ourselves for 5,000 a month because, primarily the market leader there, Royal Enfield, is a very tall and very deep brand. All of us have tried over and over again in recent years, but nobody's really been able to make an impact. So our initial capacity, as I had shared with you previously, was for 5,000 a month. And yes, last quarter we have done, I think, 8,000 totally. This quarter, I think we should more than double that to about 18,000, which means an average of 6,000. So out of a capacity of 5,000 a month, we will hopefully be able to squeeze out 6,000 triumphs on an average every month this quarter. We are in very early stages of the game. So what I'm prepared to say today is that this is not something we are about to launch, in this year or something like that. But I'm prepared to say that within the calendar year 25, which means within the next 2 years, we would certainly hope, I would not say we have decided to, but we are very hopeful of launching this motorcycle. And let me tell you why primarily, Parikshit. There doesn't exist a CNG two-wheeler in the world today, to the best of my knowledge, unless, there is some jugaad stuff happening somewhere, as there is in India also. I'm told people retrofit.
Okay, that's the word coming in from the MD of Bajaj Auto. With that, we'll move on to the fifth headline now. RBI Governor Shaktikanta Das has warned banks and NBFCs to remain watchful of any potential stress build-up during times of exuberance, asking them to build capital buffers in case of any adverse turn in the business cycle. This comes just days after the RBI tightened the rules of unsecured credit. Ritu Singh is here with the Governor's comments and its implications for the finance industry. Ritu, take it away.
Well, the Reserve Bank governor sounded a very cautious note in his speech, and the messaging was very clear. Banks and NBFCs must avoid all forms of exuberance, especially in these good times, ensure that credit growth is sustainable and build buffers in case the business cycle turns. Now, he noted that in certain cases, RBI has observed that there is an increased reliance on high-cost short-term bulk deposits, while the tenure of the loans is getting only longer, and therefore the need for strengthening the asset liability management. Though the banks are well capitalized, the governor said they must constantly evaluate theirs and all banks' exposure to NBFCs because of the increasing interconnectedness between the two, which he said could pose a contagion risk. In turn, he also asked NBFCs to reduce overdependence on bank funding. Now, the governor noted that some microfinance lenders have been enjoying relatively higher margins, reminding them that they are catering to a marginalized clientele and must not charge very high rates. Importantly, the governor also warned banks and NBFCs of relying only on model-based lending through analytics, especially when it comes to collaboration with fintechs. He said there that these preset algorithms on which the models are operated, they need to be retested periodically, asking them to be watchful of any undue risk build up in the system because of information gaps. So plenty of warning littered through the speech for lenders. And as we've seen with RBI in the past as well, if the warnings are ignored, the regulations follow sooner than later.
Banks and NBFCs may take due care to ensure that credit growth at the overall sectoral and subsectoral levels remain sustainable, and all forms of exuberance must be avoided. Though the banks are well capitalized, they must constantly evaluate their exposure to NBFCs and the exposure of individual NBFCs to multiple banks. Certain NBFC MFIs appear to be enjoying relatively higher net interest margins. It is indeed for macrofinancial lenders themselves to ensure that the flexibility provided to them in setting interest rates is used judiciously.
Okay, that's the word coming in from the RBI governor. And with that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.